So, you bought a car in 2025. Congrats, future race car driver. Now you're Googling auto insurance basics, like your wallet's on life support. Smart move, because one wrong click and boom, your bank account's roadkill. Let's be honest, car insurance sounds boring. Until you crash a Tesla into a mailbox. Then suddenly, it's the most interesting topic on earth. But don't worry, I'm not here to bore you with legal mumbo-jumbo. I'm here to decode this madness like a chill friend who actually reads the fine print. Because here's the truth. Most people only learn about auto insurance after they've already made a very, very expensive mistake. You don't want to learn that lesson in a repair shop parking lot. Trust me. Okay, first things first. Auto insurance is basically a financial seatbelt. You pay a company money every month so they'll save your butt if things go wrong. It's protection from paying thousands after one dumb mistake, yours or someone else's. Think of it like renting peace of mind from people who profit off your anxiety. Still with me? Good, because here's the part most people mess up. Insurance isn't one big happy bubble, it's a buffet of coverages. Each one does something different and charges you for it. But if you don't know what they do, you're basically buying mystery meat. Liability coverage. This one's required almost everywhere. It pays for damage or injuries you cause to other people. Basically, it's your oops, my bad insurance. You need it, no debate. Without it, one fender bender and you'll be selling organs to pay medical bills. Collision coverage. This one pays to fix your car when you hit stuff, like trees, walls, or emotional rock bottoms. You get the idea. If your car's new or still on payments, your lender probably forces you to have this. Comprehensive coverage. Sounds fancy, right? It's for the weird stuff: hail, fire, theft, meteor strikes, raccoon attacks. If it's not another car's fault, this one's got your back. You'd be shocked how often weird stuff actually happens. Personal injury protection, PP, covers your medical bills. Even if you caused the crash, think of it as, oops, I broke myself, insurance. Some states make it mandatory, others don't, but it's smart either way. And then there's uninsured motorist coverage, because, surprise, not everyone on the road believes in paying for insurance. If they hit you, this kicks in so you're not financially destroyed. It's like wearing armor in a battle where half the players forgot theirs. Pattern break. Quick question. Why do we pay insurance companies even if we never crash? Because we're not gambling addicts, that's why. Insurance is the one bet you hope you lose every month. Now, here's where 2025 gets spicy. Auto insurance rates are climbing faster than your stress levels. AI, electric vehicles, rising repair costs, it's chaos out there. Even minor bumper damage on an AV can cost more than your laptop collection. But there are hacks. Oh yeah, the good stuff's coming. Hack number 1. Shop around every 6 to 12 months. Loyalty doesn't pay here. Comparison shopping does. New customers get better rates than longtime ones. Savage. I know. Insurance companies treat loyalty like a bad Tinder match. They just stop trying. Hack number 2. Raise your deductible. That's the amount you pay out of pocket. Higher deductible equals lower monthly rate. Just make sure you can actually afford it if you crash. Don't set it at $1,000 if your savings account cries at $200. Hack number 3. Bundle and save. Yeah, that old commercial slogan is legit. If you've got renters, home, or life insurance, stack them with one company for serious discounts. They love it when you commit, but ironically, not when you stay too long. Hack number 4. Credit score check. In the US, your credit score can influence your premium. Apparently, being bad with credit means you're bad at turning left. Go figure. So, you pay those bills or your bad habits cost you on the road too. Hack number 5. Drive less. Seriously, many insurers now offer pay-per-mile plans. If you barely drive, you could save big. It's like a gym membership. You shouldn't pay full price if you never show up. Now, let's talk about what not to do, because this part hurts. Never lie on your application. The insurance company will find out. And when they do, they'll drop you faster than your ex's texting speed. Fraud flags stick around, too. It's like a bad Yelp review that never goes away. Also, don't skip coverage you don't think you'll need. Accidents don't schedule appointments, they just happen. And if you're not covered, that quick savings becomes lifelong debt. You'll go from "I saved $50 a month" to "I owe $15,000 for someone else's BMW." Mini story time. Meet Jake, just an average guy. New car, skipped collision coverage to save $40. A week later, he rear-ended a luxury SUV worth more than his apartment. Result? Jake's still paying for that mistake. 3 birthdays later. Don't be Jake, seriously. Or his cousin, Linda, who skipped coverage and found out rental cars cost a small fortune. Oh, and let's clear up one big myth. Full coverage doesn't mean full protection. It just means you have liability, plus collision, plus comprehensive. But even that won't cover everything, like lost wages or rental cars. It's called full, but it's really medium full, like a scammy buffet plate. You'll still be hungry when the bill comes. Pattern interrupt, quick check. When was the last time you actually read your insurance policy? Yeah. That silence says it all. If it's been more than a year, you're probably overpaying for something. Here's a fun fact. According to recent stats, over 60% of drivers in the US don't fully understand their policy. That means most people are driving around confident and clueless. Like people who say, "I read the terms and conditions." No, you didn't. Now let's get tactical. You want the best car insurance rates? Here's the combo move most people miss. Shop quotes online, gives compare coverage limits, gives call an agent directly. Why? Because sometimes talking to a human saves hundreds. Crazy, right? We're back to phone calls like it's 2008. Another power tip: telematics programs. That's when your insurer tracks your driving with an app or plug-in. Drive safe, get discounts. Drive like Fast and Furious, say goodbye to savings. It's Big Brother on your dashboard, but hey, at least he's paying you. And don't forget discounts for students, military, safe drivers, and AV owners. If you're not asking for discounts, you're just donating money. Sometimes just switching payment from monthly to annual can save you enough to fund your next road trip. Oh, and location matters. If you just move to a busy city, expect your premium to skyrocket. More cars equals more crashes equals higher risk equals higher bill. But move to the suburbs? You'll get a discount just for being boring. Okay, let's pause for a second. By now you're probably thinking, why is this so complicated? Because it's designed to be confusing. That's how they make money. The more lost you are, the more you'll overpay and the less you'll complain. But you're no longer an easy target. You're becoming insurance-proof. Here's your 2025 takeaway. Insurance isn't just about protecting your car, it's about protecting your future. Understand it, update it yearly, and treat it like a power tool, not paperwork. Because the more you know, the less they can overcharge you. Knowledge here is literal money in your pocket. Cliffhanger. There's one little known trick that can drop your rate instantly. But only if you know where to click. I'll reveal that in the next video. Hint. It involves a single setting that most people ignore online. So before you bounce, here's the move. If you want to avoid paying thousands in pointless fees, click over to my next video, Car Insurance Explained Quickly. It breaks down exactly how to find loopholes and save fast. You'll thank yourself next renewal cycle. Alright, that's it. Drive safe, stay insured, and remember, crashing your finances hurts way more than crashing your car. Peace out, future financially responsible legend.